What's up, Team Tackle? This is Coach Matt. We got a great Trade Masters in store here today. So welcome out to Trade Masters. Hit that like and share because you know we're going to bring the thunder and the lightning here. I don't know which one's going to be the thunder and which one's going to be the lightning here today, but I'm excited to see that out of Coach Bobby and Coach Frank. Now, before we get too deep into the woods regarding these amazing coaches and what they're going to be talking to us about in their midweek scans, we got some major news coming out in the market here today. And yes, I am talking about the king, queen, and country of the AI space. That is NVIDIA. And what do we got? We got earnings report. Now, Frankie and Bobby, it goes without saying, NVIDIA starts with a hat trick. And if they don't,
We
believe
got
me, if
problems.
they didn't pull the hat trick off, you would have saw a big red candle to the downside here. We're not seeing that, which means they actually had came through pretty good. I actually felt like this was a really good report coming out of NVIDIA here today. Number one, 6% beat against EPS. That's kind of matching what the market is doing. Revenue was up 3% against expectation, up quite a bit year over year. Revenue growth was 73% year over year. They weren't done. Revenue guidance up 7 to 8% for Q1. They weren't done. Profit margin hit above 75%. Data center revenue represents 91% of the total growth right now. It is outlandish when it
Wow.
comes to the growth that we
Wow.
are seeing out of NVIDIA. Just very special, quite frankly. And when you are looking at that data center growth, 75% year over year growth out of the data center, and that only represents 50% of the hyperscalers. So at the end of the day, we got a beat on EPS. We got a revenue story that can have the ability to kickstart a growth argument in the market. We got profit margins going into the 65%. We have total margins above 75%. And we got demand for years, basically. NVIDIA certainly pulled it off in terms of their overall revenue. Had on the price response so far, we're really kind of right where we started on the earnings print. Had a big upward movement in price to kind of start on the numbers as we got into the conference call, talking about guidance, started coming down a little bit. But that was in front of a little bit of a front run breakout here. To me, anything on top of 193, 194 is has to be a bullish conversation. And so it's going to be very interesting to see how this one handles over the next few hours, quite frankly. Upon the actual release of the numbers, we actually saw the Nasdaq try to giddy up, break out, and you see it right here, giddy up, break out. Beautiful. On the reopen of the futures, you're right back down to where we kind of ended the session. So we haven't seen the catalyst as of yet. We do have strong numbers. We have a market that is being a little bit more well behaved today and yesterday than over the course of the last week. So it's going to be very interesting coming in tomorrow. Obviously, we're going to have a big time conversation in the Traders Lounge, which we do for the pro members every single day, covering all market activity, technical levels, fundamental conversations, earnings conversations, economic conversations, whatever's impacting the market we talk about
Yes.
and break down in the Traders Lounge. But just wanted to start with NVIDIA's report because obviously they are the catalyst upon the catalyst in the market, and we are breaking out here today. We'll see if we can see some continuation following their earnings report. Frankie, just technically here, what's your thoughts on NVIDIA as we're now through the earnings print? Haven't really saw any giddy up, but haven't seen anything on the downside yet either here, Frankie, and that's after a breakout here today.
Yeah, I like really Nvidia. You had to break out the day before earnings, right?
Mm.
So, but I do think kind of the next the thing that jumps out, and obviously the secondary pattern will have to play, but this breakout, regardless of whether it was on earnings or not, I think that the kind of the thought on my head was if we can kind of get through this 165-ish level, then we have a pretty clear path into the 180-ish level,
Hmm.
right? And so I think that you are going to be. I mean, it's not like Nvidia isn't always on a watch list, right?
It
Like
lives on there.
it lives on a watch list. It's just that it's going to be on the secondary pattern watch list, like really aggressively, right? Like it's
Yes.
going to be like you get the pop back, pull back to the breakout channel. I'm sorry, so 165, I meant 195, back into that breakout channel. That's going to be interesting. You get a high base of some sort. Just looks like one of those stories where if we can get through this level, and obviously the earnings are kind of, back in that
Yeah.
play, we'll see at the top a little bit down the road. It would be nice to get some participation from Nvidia. They've been really boring for a while now, right?
Yeah, well, they've been flatlined. Oh, put it like this. They've been going neutral in the exact same time period the S&P and the Nasdaq has went neutral.
Yeah,
That should tell you
that
something.
should
They're
tell you
the
something.
catalyst to this entire
It
story.
would help the S&P
One,
break out, wouldn't it?
it would absolutely go a long way to helping that S&P, but it's not just Nvidia, it's the Mag 7. Can Nvidia spark something in the Mag 7? And one of the problems with the Mag 7 and one of the problems with Nvidia and the AI trade recently has been the conversation of valuation. PE ratios are going to go down based on this report, despite the price going up so far. Why do I say that? Look at the last 3 quarters.
Yeah.
EPS 105, EPS 130, EPS 162. Okay, so you're telling me price is flatlined, earnings is going up, and I'm not supposed to get excited?
Yeah,
Uh,
you're gonna get excited.
that kind of feels like a pinch a little bit, a fundamental pinch with EPS going up
Nice.
and price flatlining. Well, guys, we just created something, the fundamental valuation pinch.
We did.
We'll see if that takes some
You
legs.
saw it
But
here first.
again, we will have a much more detailed further conversation as we have this conversation tomorrow in more detail during the lounge. For today, let's get into those picks here, guys.
Let's do
That's
it.
why we're all here to kind of see where your guys' thoughts are on the hump day midweek technical swing trading philosophy here, Frankie. As the veteran of tackle, all things go to you first. So, do you want to go first or do you want Bobby to go
Listen, I
first?
think I let Bobby go first last week, so I'll go first this week.
All right.
Because I got an interesting name in NBIS, Nebius Group. This is somebody in the software space that's not been downright horrific. They've actually been okay, at least relative to their counterparts, right, in software. Basically, a triple bottom that these guys have put in over the past couple of months. Recently broke their trend line, ran right in that horizontal resistance that was put in back in mid-January. Now you got a higher level of support going into that break. And kind of like NVIDIA, except I would argue cleaner, it's one of those, well, if we can get through this level, and I'm going to call it 109, I think the actual high water mark was like 110.50, and that was like on the 16th of January, but it looks like most of the price action is just under that 109. If we can get through that, there's just not really any super challenging resistance until the low 130s, right? Just a really clean open window for us to work with, which you gotta love an open window, don't you? So I don't think you have to be too crazy here. You just look for the break wherever you would. I think aggressively you could say it is over today's high. I'm going to kind of say if you didn't play the little support bounce, you're kind of waiting to over 109. But again, there's a little trader's discretion there, I would say. Regardless of kind of where your entry methodology is, I think you are targeting back up into the 130, 134 range where you had that double top back in, what was it, November, December timeframe. I love this little window. I love the relative strength. I love the triple bottom that it's had. It's taken time. So moving averages have aligned the right way. Nothing too fancy. A lot of ways you can play this. Shares play, pop a call. I don't mind something like an April 110, 130 bull call spread to kind of try to capture that whole window with a stop loss under that pivot around $95. But again, I think it's the buy signal that really stands out. And I could see, just depending on the trader you're talking to, how they specifically would like to play it. But I really like the look of this MBIS here.
So you're thinking confirmation breakout above 109, and then you're thinking the 110, 130 bull call spread?
For April, yeah, that's the one that I'm
And
thinking of then.
and on the 20-point range here, Frankie, I understand why you did the 20-point range, but can you just kind of explain your thoughts there on the 110, 130
Yeah, I
strike
mean,
price?
part of it was pricing, of course, right? But the big reason, because I'm assuming that the price, and if the price is wrong, it doesn't matter. Nothing else matters, right? It's the window, right? It kind of takes me from my breakout point to kind of the level that I think is where this trade would be over for me.
Yeah.
So it's basically trying to capture the window, come in right about the money, maybe a hair out of it when you get the break, sell at the resistance level, have that whole window to work with. It's a good problem to have if this works into that and I have to,
Mhm.
do some sort of rolling or think about it or what have you. So it's really kind of the window fill, and that works pretty nicely, I think, when you kind of are, selling the contract towards your target
Mhm.
zone.
Yeah, I love selling that on a bull call spread, selling that strike price right at that secondary target, that where you kind of feel like the real target is,
Yeah.
because you cap your gains above that strike sold.
Yeah.
And so it just kind of makes some sense to sell that at that resistance level in the first place. Like the window here quite a bit. Bull call spread will offset some of the volatility. MBIS is definitely a volatile
It can
stock.
have some. Yeah,
It
it can
can
have
it
some.
can move. Couple just two questions. Number one, position size according to risk
I would actually, I
or
think that's
stop
fair, but
loss.
I would put a stop loss under 95-ish, this
So
recent
underneath
pivot.
pivot.
Underneath the pivot, that's going to be roughly 250, give or take,
Mhm.
on the risk. I don't think you need to position size this to risk, because if that level goes, and I got, well, regardless of whether I got triggered in or not, but assuming
Yeah.
I do get triggered in and that level goes, it's going to look an awful lot like a fake out, right? Where you broke through resistance, you couldn't hold that, then you broke through the pivot, and it's probably you're coming back to the 200-day moving average in that scenario.
Yeah.
I don't think you want to sit through all of that. So this would be one of those scenarios where I would put a stop loss. I'd like to go, into April versus say a March, because it's a little more predictable what that's going to look like at $95, right? On a little bit more time. So that's why I like the April over the March, primarily in this particular case.
Gotcha, gotcha. Frankie, when you're looking at a backdrop of multiple time frame breakout, as this is obviously looking at right now, when you run so far, I mean, you're running from 73 all the way up to 109. Stocks get tired the same way people get tired when they
Yep.
run too far, especially going into breakouts. And that's a tall ask to say, hey, listen, run from 73 to 109 and then break out of 109 and run to 130.
It's
That's
just a
that's
tough ask.
that's tall ask. That's a lot to ask for. You get that increase in support as we did here at 95. All of a sudden, you're running from 95 going into that 109 breakout in a stock that you just saw run from 73 to 109. You
Yeah.
know it can break that at that point. That resetting of the support level against
It's a
the
big deal.
backdrop, that looks really, really, really good. Like your pick there, like the call out, like the breakdown and the analysis. Thank you so much for
Thank
that,
you.
Frankie. MBIS, multiple time frame breakout with the 20-point pocket and a bull call spread, Bobby. Can you beat it? Let's go ahead and see. Bobby, what you got in store for
Yeah, I think I
us?
could give Frank a
Round
little
one.
run for his money here. I'm gonna go a different route, something that's been, high momentum in J&J. Matt, if you could just pull up a monthly chart here on J&J. If you just look at this, I mean, J&J has just been a monster. It's been doing everything we want, and just recently, for the middle of last year to now, it's just been doesn't want to stop. And so, why go against the trend when something like this looks like this? So,
Yep.
for me, you got this nice little secondary pattern here on the daily, a nice little high base. It's, got your zone. 247.25 is, your resistance. It's got a clear support, which I like. When I'm looking at high bases, I like this, high bases to show me, where is that, resistance at? Where is that support zone as you have drawn now here? If it's constructive, it's a very good high base. And so J&J here, it is a little bit more of an expensive stock, but overall, there's a lot you could do on it, especially with the options wise. But before I get into the options, I just want to say overall with the sector XLV, J&J I think is about 9% of the sector. So if XLV looks pretty constructive here, if it goes, that means J&J is going to go with it because between that and Lilly, I think those are the two highest
Big
holdings
dogs.
in the in the sector. So, looking here, back on J&J, for me, last night, me and Frank talked a little bit about tweeners and lobs. And what inspired me here is, I like to do a little tweener here. Look, when you go to the options, if you go to the trade tab and look at the March 250 by 260, you get about $2.50 on these options. And what I like about this is that, you are hitting your rules, which is, I mean, the standard rule is 40% of the spread. You got a 10Y spread. You're way under that at 250. And another thing I like about it is you have your defined, support stop zone where, if you find that, and, for me, it would be either between, I would say maybe the 220, which would be that big red candle there, or, you have an option to put it to the candle the next day, which would be your 223. It looks like a Monday. So you have a couple options on the stop.
40, just to clarify, 240, 243.
Correct. Yeah. So
Yeah.
you have different options where you can play the stop, place your stop on this one. So that's another reason why I like, J&J, especially, with the 10 wide spread here. Target wise, I have a 250 by 260. Now that would be, within the spread. 260 would probably be, where I would be targeting, probably T2, but I'm in that 255, 260, probably. I wouldn't mind going 265 on this, but since I'm doing more of a shorter time frame, spread here. You want to give it, hopefully you get your move, which I think it's more realistic to get to that 260. But if you do get, past that spread, you can, there's a lot of different management options you can do there. So target wise, 255 by 260 for me. Confirmation over this 247 25 would be for my entry here. And like I said, on the option, you can either you risk the spread, which would be the 250, or if you have to put the stop loss in, which I was, playing around with the analyze tab while Frank was going on his pick here. And, if you, do go below those candles, you're not really, for your stop, you're not really risking as much.
Yeah.
So, I like the little setup here on J&J.
Both bull call spreads. I would, obviously bull call spreads are a conservative way to play a technical edge there. Both of them high quality, in my opinion, technical setups. My question for you guys is, what would it take in the market or in these plays for you to be more aggressive in strategy selection?
For me, it would be the calls were just dirt cheap. I
Does
would
that
rather.
does that make sense, Frankie? Like,
Yeah, it does. And my real answer is, I mean, again, if the calls were really, really cheap, but I would rather have two bull call spreads than one long call, if you
yeah,
will. So I generally, even when I am not feeling more conservative, I generally prefer to go the spread
the
route
spread
because
route.
it gives me more flexibility. So I kind of don't really, I do agree that it's a more conservative way, but I don't really tend to think about it like that,
Yeah,
if that
yeah, yeah.
makes sense. Because I kind of think, well, if I have two of these, then I can do my scale out at
Hmm.
255 at T1 and leave the other
Listen,
one open. And
two
it's the
spreads at a
flexibility.
25 delta contract is
It's the
the same as a 50
flexibility.
delta contract on a
The
call
way
side.
I see it is I get so much and all I give up is theoretical upside. Ain't nobody ever got theoretical upside.
Well, you're
Right.
the way I've
So
always seen those spreads. You're buying a good call option, you're selling a bad call option.
yeah, it's just, I just much prefer them,
Yeah.
when it comes to directional trading, the vast majority of the time personally.
Yeah. What about you, Bobby? Is that I know you and Frankie are kind of Borg twins the same way we kind of all are.
I guess you
But
could say that. Yeah, no, for me, I mean, it's, I mean, I want to piggyback just off of, kind of what Frank said, in my early years, I would be aggressive buy a long call, especially with a setup like this and just,
yeah,
bet
full
for the
port to the
moon.
moon. Let's go.
Yep.
But now,
Love
as you
it.
get older and you start, playing around with your journals and you start seeing things, you kind of have to be more strategic. And for me, doing more of those spreads and, doing more of the, even if you go cheaper with the cheapies,
Yeah.
gives you that flexibility to be able to do more things. And it's a numbers game, especially directional trading. It's hard, because you don't know. I mean, you don't
Especially
know
in a
what the
neutral
stock's going to do.
environment with the market.
Correct. You don't know what the
Yeah.
stock's going to do. I mean, you might be trending up, and then one day some news might come out, and things might just turn for the worse. So, you're just playing that probability game, and so you want to put probability on your side. So, layering and playing with the numbers and doing spread stuff, I just think it's more feasible in that sense.
Frankie, I don't know about you, but Bobby just made me feel very, very proud, but also very, very old when he's
Yeah.
like, now that I'm a veteran trader and, I'm a
And
little
I'm
bit
getting older.
older and here's Frank with the, 70-year beard and,
Yeah.
me
Bobby was calling me
going
Otis B.
gray everywhere.
Driftwood before we went live
And
until we
Bobby's
went
like,
back
yeah,
to
as I
Otis.
get
Frank's gonna whip out
older
his
and a
guitar.
veteran, Like, all right, I am so proud of everything he's saying, but I am so old right now.
Yeah, pretty much.
So
Yeah,
Bobby,
pretty much.
thank you, and Frankie, thank you for those thoughts. And I couldn't agree more. Regardless of what the market's doing, you trade your systems, and if you feel like a bull call spread is better than pop and call options and seeing what happens, I think a lot of traders would agree. Again,
Yeah.
I
um,
agree.
so well done. Appreciate that. When I'm looking at both of those, I like both of them. I think they're both high quality picks. You got Johnson and Johnson in a secondary pattern on the daily chart against the backdrop of a weekly and a monthly trend that is actually increasing its momentum.
Monster.
It's a monster right now. So you definitely have confidence in secondary development on a daily chart against a trend on the weekly and the monthly, like Johnson and Johnson. And then if you're looking for, to pick up that big stick a little bit, MBIS has a 20-point pocket that doesn't have a lot of resistance in it.
Yeah.
So I think both picks are high quality technical setups. Let's go to round two here. Team, let us know if you watch this on the recording later on today. Let us know in the comments section. Let us know in the chat which one you personally like, Johnson and Johnson or NBIS. Round two, Frankie, we're going to go snake style
All
here.
right. Snake it up.
Bobby, bringing up round two. Bobby, I know you got to pull back. I know, Frankie, you got to pull back too. Round one, we were
Yeah.
talking breakouts. Let's get into the pullback analysis, Bobby. What do you
Yeah,
got in store for us?
yeah, the last couple of weeks have been, just a lot of great pullbacks, and a lot of them have triggered, and so hopefully this one here triggers. I'm looking here at Marriott, MAR. Marriott, has been, it's kind of like my example on J&J. If you go out to a monthly, it's been a juggernaut, especially in, being a hotel leisure type company, and it's done everything right. It looks like if just take a look at that. But, constructively here, you had your nice little pop here on earnings. You had your nice little pullback. Volume is pretty much, playing in your favor, with that pullback. And so you got your secondary pattern, pull back into that 20. You're sitting here. So now what you're really wanting to do is, hopefully get that confirmation. One thing that I like to do when I'm looking at like a retracement pullback into the 20, I like to look at that hourly chart. If you want to pull up the hourly, very constructive. If I get that, you get a nice little constructive pattern, and you have your little support, you draw your lines like you're doing right here. That is very constructive. And, that means, hopefully you can get that. I don't want to say you're going to get your confirmation, but it
It
gives you that
definitely feels
probability.
like it, doesn't it? Like,
Yeah, puts the
yeah,
probability on your side
the
to
intraday
potentially
tells the
get that.
story here, no
Indeed.
Yeah.
doubt.
Oh yeah, and they usually do on those, pullbacks into the 20s, and that's why, I always like to layer my pullbacks into like a flag, pull back into 20, pull back
Yep.
into a 50, like a deeper retracement, and have rules based around those. And so, for this one, since you already got your pullback into the 20, a lot of times for me, I would like to wait for, that confirmation candle. I still kind of do. You could say today was your confirmation candle. If someone wants to be
Technically,
on the
I'd say it's sniffing it, but it's not there yet.
Yeah.
Yeah. I mean, if you want to be a little aggressive, yeah, you can go over today's candle, maybe like with a half a position, like a scaling, and then, add the other half on there. If you want to be aggressive, or if you want to wait for just for that confirmation candle to go, your full position, that's a viable option as well. So, with being a more expensive stock, shares is hard to do, but shares is not something that you cannot do. I tell that to a lot of people all the time. Is even if you can't afford the options, you definitely can go in and buy two shares. And I know Frank's an advocate of that as well, because
Yep.
just because it's expensive, you don't want to miss out on an opportunity, especially on a setup like this. So, for me, um, you know, coming over to the options chain, I do favor more of the bull, the spread trade here. I'm looking at the April 360 by 370. Um, that seemed to be about the best price. Giving it a little bit of time, you're getting about 340, which is well, under your 40% of the spread. Especially that's what we talked about in the coaches so in the last couple of days. Nice little setup here, nice little trade structure. When you come back to the chart, that's 360 could be your T1, which is just shy of that, pivot high right there. And then if you do get that break, which would be, dead to the penny on, the top of that wick would get you that 370. So, those would be my two targets. That's what I would target into is to be the 360 by 370, which gets you into that, pivot and that wick high there. Stop loss. Um, one thing I like, as I mentioned in the other one, you have three different options. You could either go below, the red candle, the candle there, which would be your pivot low. You can also go below the 224 candle, and then you can also go under today's candle. So you have two different options. Placing your stop. This depends on, how aggressive you want to be and how, conservative more, if you want to give it some room, don't want to choke it off.
I def
I
like pivot, by the way, on the stop.
correct.
In
And
this
then
case,
I
I
was
would
gonna
agree with that. Just doesn't cost you a ton more, right?
Just doesn't cost you a lot.
doesn't cost you a ton more and you get more of support. You get the 20 moving average here and you do get that I think it's the 9 as well. So you have a couple different, zones there, and plus your risk reward is, nice going into that 370. So, I like these plays because you definitely, with a deeper retracement, you definitely get a nice risk reward,
Yeah.
and there's a lot of different things you can do. So, I like a little spread trade here on Marriott.
Frankie, this is a pretty good little
Good
flag-based
look.
pullback. It's not one of those prototypical flags because you had a high base going into it. And usually I get a little nervous on high bases that turn into pullbacks, but this one really looks pretty clean.
Yeah.
And you got to love the intraday story here. I think it stood out to all of us. But what do you like about this intraday story?
It's just clean, right? I mean, the
Mhm.
thing is you want, whenever you're getting involved, you want as little working against you as possible, right? And that does include intraday resistance levels and intraday moving averages, right? What I like about it is if we get that confirmation that Bobby's talking about, we basically kind of get through all of that, and
Yeah.
that's one less thing that can hold our trade back, right? So it's always one of those things that I know it being above you, when you have stuff above you and you're a bull at least, it never helps you out. So it might not help to have that intraday lining up, but it never hurts to have that intraday lining up. So I think that's a good call out there.
Love it. Frankie, it's going to be tough to beat on this one, Mary. It's a good little flag-based pattern
It is
coming
really
into the
nice.
9 and 20. Good pivot confirmation, looking like a pretty decent little directional setup
It
here.
absolutely is. Yeah, I
Um,
absolutely got my work cut out for me. I do like that one quite a bit.
yeah,
I'm going to
this is a
try.
good one.
I'm going to
Let's
try though
let's see what you
with
got, brother.
well, I'm going with Borg Warner BWA. Very similar situation in the sense that you had the big run on earnings and then the pullback post earnings, right? The pattern's not, one for one, but kind of the story that led to the pattern is that. But what I really like about BWA here was, I mean, that was a great response to earnings, right? And a very orderly pullback. I mean, if you think
Mhm.
about that earnings day, right? That 11th candle, I mean, that was a crazy bar for these guys. And while we've given most of it back, we've done it in a very gentle, mellow manner,
All
right? And
inside retracement following
all
an
inside
earnings. All
retracement,
inside retracement. This is a
dance.
beautiful pullback.
It's dancing around that 9 EMA. And then when you want to talk about a clean, intraday chart, you're going to see the exact same thing with the price action
Yep.
we've seen over the last
Put it in a
4 trading
textbook.
days. Like you can take a picture of that bad boy,
Mhm.
right? And so we've got a good, clean support build. We just need to get a little upward momentum. I've been looking at these guys since Friday, to be honest with you, on Friday's candle with the high
Yeah.
over 60.14 and the the low is now under the
It's done
Monday
nothing
candle.
wrong. In fact, it's
It
even
stayed
better today.
it stayed inside, and because it stayed inside, it's created that hourly or that intraday chart time frame that really has that super clean
Yeah,
look,
I agree.
right? And so
Real good pivot analysis here.
really, really like it. I think it's very much a go or don't situation where we're coming in over the top. I have that at 60 14, which was Friday's candlestick, and underneath the base at 58. I wouldn't personally give it a lot more room. If this level goes, I would just kind of move on or track it as
Mhm.
at more of a retracement. So I
So
would,
is this kind of a
it's a
go
go
or
or don't.
don't level
To
here
me it is, yes.
unless you redevelop King's Bed style down here?
Yes. So
Okay.
like I would be open-minded to a deeper pullback, but this trade is really predicated around the last 4 trading days, 4 trading sessions. And whichever happens first, you go above the top first. I'm cool. You go underneath the low first. I'm not cool. I'll
Mhm.
reevaluate on that. I don't think you're
So
getting
you're basically just playing the 4 bar here. You're playing
basically
basically above the 4 bars, stop under the 4 bars, and just kind of playing that specific pattern. I love the analysis here.
exactly. And then
Uh,
basically seeing where it can go, right?
yeah, yeah.
Because it was, just at $70, just, at its high. That probably is as far as I'm willing to try to take this bad boy. but you don't need that. I mean, that's, over 4-1 on the risk to reward, right? And so what I kind of like doing in this type of situation where I kind of am looking at the swing high, post earnings high is kind of T2, is I kind of just go and ask myself, what do I need? Right. And I need 1-for-1, better than 1-to-1 on risk to reward for T1. When I don't have a clear target, that tends to be my default setting, right? Which would put us right around 62-40 or thereabouts, mostly because that's a managerial location for me, right? And so the
You do
easier it is
got
to get there.
some stuff around the 66 level,
Yeah, but
65 level.
like you have some stuff
Just
everywhere, but
historically.
nothing scary, right? It's
Yeah.
just, to me, it's just one of those things that it was a great response, pretty clean pullback, super clean intraday, really good risk to reward. And I think about, what do I need for the 2-to-1 minimal threshold? We're talking 64.50 or thereabouts. That seems super doable, right? It was at $70 just 2 weeks ago on the back of earnings. That's doable, maybe not super doable, but it is doable. So I kind of like, however you want to structure T1. Honestly, I always say, well, I don't always say, but when I don't really have a target, I do tend to say, T1's negotiable,
Yeah.
right? And when I say that, I usually mean low hanging fruit. Give me that 1-to-1. But if somebody else said, no, I'm going to go to 65, I would be fine with that too. So I do think you're just trying to see how much of this window that you can fill up. Very much a go or don't type situation. Great risk to reward. This is a shares play. The options are weak on BWA, so I would not look that direction personally. I think you're just playing shares in this particular case, which is fine, right? Ain't nothing wrong with that. But I do
This
really
ain't
like BWA.
2005 when we started, brother.
No, back when we started, we couldn't go buy a dozen
Bobby,
shares.
that means we're old.
Means we're old.
Yeah.
Yeah, it does
That's
mean
all it
that,
means.
but that's what it means.
Yeah.
It's a lot friendlier these days. That is for sure. But I think BWA can go toe to toe with Marriott, who I do like. Marriott, I do really like the risk to reward situation on BWA, which is kind of why I will still side with them.
Honestly, I think both pullbacks are really, really, really good. I think they both have very compelling technical stories. You look at, and I think you nailed it, Frankie. Like they might look different because Marriott had a high base into a flag, and this one was just more of an inside pullback, but they're both positive earnings reports, secondary patterns after that positive earnings report. And this is what the secondary pattern is. And so if you're going to trade a secondary pattern following an earnings report, you got two choices here, right? This is what they look like. They don't always form up into, pullbacks. Sometimes they form up into high bases. Sometimes it's a gap fill, but once that secondary pattern has been identified and they're both flag-based patterns and look pretty good, it's just a matter of what you're going to do about it. So love the analysis on all of them, from MBS to Johnson & Johnson on the bull call breakouts to BWA and the Marriott pullbacks, guys. You really brought the thunder and the lightning here today. I will say, Bobby, you were the lightning, and Frankie, you were the thunder. You guys can debate which one's better than the other one. We'll have that conversation
We'll have
later.
that conversation another time.
But just wanted to say thank you for bringing awesome analysis, awesome picks here for our midweek conversation in Trade Masters. And let's go to some final thoughts here, Bobby. What's your final thoughts here as we conclude Trade Masters here today?
Yeah, no, I mean, I'm anxious to see, what the market does tomorrow, post Nvidia announcement, and I'm excited to see, what Nvidia does. As I mentioned before, I'm always a big fan of taking a peek at Nvidia and seeing what it has in store, especially after its earnings, for maybe putting something on. So I'm excited for that, and we'll see, where these next levels are, and if someone's out there and they're bored tonight and want to come, join the Phoenix Lab with me tonight, we'll be on at 8:30
What you teaching
Eastern
tonight
time.
in the Phoenix
Nice.
Lab?
Very nice.
We are continuing our strategy of scaling in on credits. So I introduced that last week, showing just pretty much, what, how I, structure my credit spreads and, what I do for management wise with,
Yeah.
Scaling in and stuff. So we're gonna, I placed some trades that I posted over in the Phoenix Lab, throughout the last week and this week. And so we're gonna just kind of go through those, talk about management, and then just revisit, that strategy, and then, maybe talk a little bit about watch lists.
That's awesome. Thank you,
Nice.
Bobby, so much for that. Frank, final thoughts.
Yeah, well, make sure you join Bobby in the Phoenix Lab. I know he's always going to bring it. I might give him a hard time, and he does deserve it, but I also know he's going to bring it. So have fun in there, Bobby. I kind of echo Bobby's sentiment there, like much for the market. How do we respond, right? We've seen a lot of good move in semiconductors without NVIDIA. We've seen SMH be tremendously strong. That's just not been enough, right, to catalyst spark the market. NVIDIA getting involved, is that enough? So I do think that is the number one thing on my mind as well. I'm very much looking forward to the lounge tomorrow to have a detailed discussion on NVIDIA. So come join us in the lounge tomorrow morning. And if you're not yet a pro member, never a better day than today to do it, right? Just hit the link in the description, sign up for a free trial, come hang out with the best community there is out there, bar none. You love trading, you love traders, you'll love tackle trading. And I guess that is my final thought, Maddie, but a pleasure as always. Thank you for having me. And thank you, team. I always appreciate and love you.
And for me, I'm going to be tracking this NVIDIA intraday analysis and into the overnight session, because the NASDAQ is basically doing the exact same thing NVIDIA is doing on the overnight right now. Like you're looking at NVIDIA, but you can't see it. But if I go over to the NQ/NQ and let's pull up that same screen,
Yep.
and we just look, yep, that's
Queen.
NVIDIA. And
Yep.
so a little bit of a gap out rejection right now. Interdays are selling off a little bit here. That's going to be an interesting conversation for the next few hours, quite frankly, for me. But with that said, I hope the team enjoyed Trade Masters. If you're watching it tonight, leave a comment. Let us know which pick you like the absolute most. And if you're looking for more deep analysis to help navigate the financial world every single day, like Coach Frank said, come join us at Tackle Trading. Become a free trial member of the Pro membership and hang out with us every single day in the Traders Lounge in the Tackle Trading Discord. And with that said, I hope everybody has a wonderful and blessed rest of your day, and we'll see you in the community.